The government has been urged to control bank interest rates to make loans more affordable to young entrepreneurs and small businesses. Now, speaking in Nairobi, a section of youth leaders drawn from the civil society organizations raised concern on the compliance window period, urging the government to amend the clause to provide a one-year transition and public sensitization period. Now, the group, largely from Sheria ya Vijana Project, an organization of African Youth Kenya, OYA, at the same time challenged the government to transition to renewable energy to avoid government over-reliance on imported petroleum products. They said the current fuel crisis in the country can be a thing of the past if the government embraces alternative sources.
We don't want for us to not comply within the time that has been given. So our recommendation is they can amend the clause to provide a 12-month transition and public sensitization period that will be also exempting businesses with turnover below 1 million annually from mandatory integration.
One thing that I can say with the finance bill is that it has to be an investment to the youth demographic, because at the end of the day, we make the largest demographic population of Kenya's population.
We commend the government's efforts to do away with VAT on electric buses and bicycles, including dialysis as well. We also commend the reduction of corporate tax for non-resident companies to 30% from 37.5%. In the current act.
We are also encouraging that at a time when we're struggling with the fuel crisis, we also start rethinking on how we can solve fuel challenges in the future. And that is majorly through transitioning into renewable energy, because Kenya has immense capacity to generate solar power, biogas, and even geothermal. Because if we continue relying on imported petroleum products, which are first, even pollutants of our environment, and then we remain in the hands of foreigners.